DSCR No Ratio loan. I'm Austin Clarence, your loan officer. Today we're going to chat through a DSCR loan that has no ratio. So a no ratio, pretty self-explanatory. There's no consideration at all for the DSCR ratio. You're probably already somewhat familiar with a DSCR loan, which the biggest perk being the lender is not going to look at your income, no DTI. They're only going to look at typically the long-term rental income that would come back on an appraisal. On a standard DSCR loan, you always have to look out for and make sure you have at least one DSCR ratio. This is where the rent completely covers the entire mortgage payment after taxes, insurance, and HOA. So in a typical DSCR loan, you have to have that one DSCR ratio, or it can be a deal breaker. The biggest perk with the DSCR no ratio is the loan still going to be approved and get through underwriting, even if the property doesn't cash flow, even if the property doesn't have strong rental income. So you might look at this option if you're doing a standard DSCR loan and you want to have a backup plan. You can pivot to the DSCR no ratio loan option, or you might look at the comps and think that the property might not have the strongest rental income on paper. And this can be a great option to go in knowing that you're not going to have to stress about the appraiser's 1007 rent schedule. If you're a repeat investor, you're probably already aware appraisers and appraisals in general are pretty unpredictable. So if you have any concerns about having a strong ratio, this can be a great option knowing you're not going to have to stress and pray about getting that appraisal to completely cover the PITI payment to have that one DSCR ratio. In order to get through underwriting, you typically have to have at least a 25% down payment, right? So ideally, you want to have a 25% down payment and at least a 700 credit score. It is possible to do with 25% down with a 660 credit score. Like any other loan, the stronger the credit, the bigger the down payment, typically the better overall terms you're going to get from that lender. But the bare minimum would be a 660 credit score with a 25% down payment. The lender is going to want to check and verify that you have at least 3 months worth of reserves in the bank. So you can use 401k or retirement account stocks to make sure that you can make the first payments in the lender's eyes to offer a little bit of strength considering the fact that the loan's not going to have cash flowing rental income. So overall, this is a great loan program. It can be a fallback safety net program if your appraisal comes in low with a DSCR loan, or if you have any concerns about getting that one-to-one ratio going into the transaction, it can be a good option to set up that program with a DSCR ratio as the plan A. And if you happen to get strong rental income, you can always pivot back to another loan program that might give you better overall loan terms if you can actually get a one-to-one ratio. So any questions you have about this program, please drop me a comment. Let me know if you want to set up a call. My company and I offer DSCR investor loans in 42 states. So any questions at all, happy to connect. Thank you.